You are listening to chartingwealth.com for Wednesday, the 8th of August, 2018. We see stocks up for the day, bonds down, and we see gold up. We're going to jump right into these charts. We look at the chart, the S&P 500. What do we see? Going to our fifth week of strong up movement. The derivative oscillator is gaining upward momentum. Price percent oscillator is heading up this week. So far, just 2 days in, candles as big as any candle since, I guess, the biggest one so far on the 13th, the week ending Friday, the 13th of July. So again, mighty big candle already forming. Market up 0.33% for the day. That again is the S&P 500. So again, looking quite sweet. Price movement, of course, well above the 2-day and the weekly trend line. We look at the 2-day trend line. Now again, the prior candle formed on Monday, so this is just the first day into the latest candle, and it again is a strong 2-day up candle that's forming. Price movement well above the 2-day, well above the weekly. Derivative oscillator, just a little bit more than flat. Price percent oscillator, of course, is heading up quite nicely. We look at that 4-hour chart, and of course we had that jumping in point. Again, at our Heikin-Ashi candlesticks, those you've taken the training on that, it's available. You can find the Heikin-Ashi training at the website, YouTube channel, all over. I think we're up to like 85,000 views. It's the #1 Heikin-Ashi training you'll find in the world. Please take it if you haven't already. Heikin-Ashi means average pace in Japanese. It's the kind of candlestick we love. It's calculated differently in the open, high, low, close, but it really helps us see momentum, see average pace. That's what it means in Japanese, I am told. And of course, crossed over going up in the morning on, in the afternoon on Friday the 3rd. And then, of course, we were looking for jumping in Monday morning. And of course, that made itself available Monday morning and afternoon to early afternoon to hop in right after that candle closed, or around 10:30, depending on how you viewed those charts. And of course, it's continued to rocket up since then. That is what we exactly like to see. We told you to prepare for that over the weekend, and those of you who did it, I know you're very happy in your virtual trades. Remember, we're not a stock calling service. We are an education firm, and we encourage you to practice trade with us all the time. In fact, we've got a great trade worksheet, a great daily market and weekly market worksheets. They're all available in the show notes, whether you're a subscriber. If you're not, you need to be, my friends. If you're a subscriber, you get all this stuff every day. You can also find it at Charting Wealth under the daily market review, and you can find it under the notes on the YouTube channel. But again, things are going just the way we had hoped they would, and as our charts said they would. So kudos to all of you who jumped on that S&P trade. Pay attention, though. This is a market that keeps flying high and high and high, and what happens as things go higher? You know, it's like anything. You keep building up, building up, building up. Your base can get weaker and weaker, so just be careful. Pay close attention if you're into a practice trade. You don't want to lose what you've gained. What do we see on the Qs, the NASDAQ 100 going from the S&P 500? We see a nice green up candle forming on that weekly chart after a prior doji. And again, just 2 days into it, derivative oscillators gaining some momentum. Price percent oscillators a little more than flat, headed up some. Again, not as strong as the S&P 500 after all that trouble with Facebook and such a few days back. What do we see on the 2-day chart? Just trying to cross over going up. Can't call it a crossover yet until that candle draws. And the only problem we have now is we're still way negative in that derivative oscillator, but we'll watch the price percent oscillator, see how it wraps up when this 2-day candle closes on Wednesday. And let's take a look at the 4-hour chart. What do we see there? Well, of course, it crossed over going up back on the 3rd and has headed up ever since then. So again, things are booming up, and we'll continue to watch and see if indeed we're going to have this 2-day candle rotate over. So we'll keep an eye on things, let you know if and when that occurs. May very well happen tomorrow. Now we go to TLT 20-year bonds. They're trying to cross over this week going down, but so far we have a green up candle Now again, that is not a solid green up candle, which is our strongest solid red, or our strongest down candle, solid green, strongest up candles, but we are seeing some attempt to not be as strong in the down movement. But so far, derivative oscillators in the negative and price percent. This candle, of course, will not close till the end of the week, so we don't call it until the end of the week. We'll still call it in an up move, although barely, and keeping in mind what's really going on. What do we see on the 2-day chart? Well, it's in a confirmed down move and has been since the 2-day candle closed on Monday, the 23rd of July. I almost said August there. And we do see a little bit of backing off. We're above the 2-day trend line. Derivative oscillators losing downward momentum. And again, we've just broken that. We're going to have to see how and when we can redraw that trend line and what's really going on. We'll wait for that candle to finish drawing. And on the 4-hour chart, of course, it crossed over going up back on Friday the 3rd in the morning. Went up until Monday morning and then sort of rolling over since then, but still in a confirmed up move. So let us keep our eye and see how bonds continue to develop. And again, don't forget what we were teaching you yesterday about UUP and that dollar bullish index. It runs contra to gold. And as we see the dollar move up, gold moves down. They're almost perfect reverses. So again, if you really want to pay attention to what seems to be affecting gold the most, it's how bullish or bearish the dollar is. The more bullish the dollar is, the more gold goes up. The more, I'm sorry, I said that backwards. The more bullish the dollar is, the more gold goes down. The more bearish the dollar is, the more gold goes up. So keep your eye on what's happening on the dollar index if you're interested in finding a bottom in gold. That's where we are, folks, as we go through all of our charts like we do every single day. We so appreciate you being with us. You have questions, problems, concerns, feel free to write us, chartingwealth1@gmail.com. If you've not purchased our book, do so. Help us out. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.